Good morning. So today our accounting standards are going on beta. So start with the same. Welcome to all of you at ICI portal. Karthik Gupta, Pooja, Annie, Siddharth, Hitesh, very good. Good morning. Good morning. Whomsoever are present, send your presence when ready. Jasprit, Shri Ram, very good. Very good. Send your presence. Very good. Beta fast, fast. Let's start with the accounting standards. We are already doing accounting standard number 7. We have already done up to accounting number 7, and then we are continuing with AS9 and AS14. As we have already discussed the logical aspects or the concepts of AS9 as well as AS14, today we will discuss with the problems. If you have any issue in AS9, that will be taken first. So very good. Good morning. Good morning. That's right. Meman, Vincent, Gani, Aditi, KSI, Neha, Shruti, Meghna, Fatina Bindu. Very good. Good morning, beta. Add your presence, those who are available. Very good. So let's start with AS9. Having any doubt in AS9 or in its illustrations or in any type of other concepts regarding AS9, let's discuss with that first. So tell me, having any issue in AS9? कोई भी प्रॉब्लम? Waiting for the problems in AS9. Any problem? Illustrations are given here. Assume everything is clear, beta. AS9 is fully clear to all of you. These are the illustrations given in your AS. These are very logical and conceptual points. If once you will understand that, it will be easy to go forward in your exams. So beta fast. Any problem? AS9 and then in AS14. If there is no issue in AS9, send me the problems in AS14 then. Yes. Illustration number 3 of AS9. A claim lodged with the railway in March 2011 for loss of goods. This is illustration number 3 of AS9. A claim lodged with the railway in March 2011 for loss of goods of rupees 2 lakh has been passed for payment in March 2013 for 1,50,000. No entry was passed in the books of the company when the claim was lodged. So we have to advise P and company about the treatment of the following in the financial statement of accounts for the year ended 2013. But one thing is very much simple. While talking about any type of contingency, now here we are talking about claim lodged with the railway company. So claim has been lodged, but whether it was sure that we will receive the payment or not, if there is no surety, if there is no confirmation regarding the receipt of payment, then we can't enter it in our books of accounts, as we have already discussed in the contingencies, that any contingency whose surety is not confirmed, this is purely based on prudence concept. Do not anticipate gains, provide for probable losses. So if there is any gain which we are expecting, that cannot be entered in the books. If they have not entered it in the books, it's not a problem. But today we have received the claim. This is also sure from this that we have claimed for 2 lakh, but we have received only 1,50,000. That means for this claim was not final, this claim was not sure when we have lodged it, because we have received less. So there may be a chance we have received nothing also. So it is not required to be entered in the books in March 2011. It will be entered only on receipt basis, on confirmation basis. So in 2013, we will treat it as our income. Here also it is given this transaction cannot be treated as a prior period item, because prior period items are those items where we are expecting that, here it has been mentioned, this transaction cannot be treated as a prior period item because there was no error or omission in the previous period. We can't say there was an error or omission. It will not be an extraordinary item because loss of business is a extraordinary thing, but that has been in 2011 only. Its receiving of its claim is not an extraordinary item. Here it is very much clear that here we have received this payment and this payment is of such size, nature or incidents that their disclosure is relevant. So the nature and amount of such item should be disclosed separately. Hence, it is an ordinary item which is to be disclosed separately. That is a point one. Nothing else is there. Everything is okay, beta. Without ensuring collectibility, recognition should not be done. Exactly, beta. You are right, Vincent. Without ensure, sir, you said to explain illustration number 1 of AS7. Yes, exactly, beta. Aditi. I have checked that AS7 also. Basically, AS7 is completely related to contract costing of your cost accounting. So I suggest you all that in case of two AS, AS7 and AS14 out of the total AS, these two AS belongs to your chapters. And due to the reason that they belongs to your chapters, if we'll do it now at this moment, obviously number of things will not be clear because here it has been given from practical aspects. But for that, the complete understanding the practice is required. So illustration number 1 is not giving us the proper answer, but I don't suggest you to make yourself based on this chapter. Instead, you should have to go for the contract costing in your cost accounting. Whatever concepts you will study there with the reference of this AS, you will have to add these two. And accordingly, you should have to give the answer. If any practical question comes into your exam, it will be better to take for the help of your contract costing chapter in that case. The same is in the case of amalgamation. In amalgamation also, AS14 is just a reference based AS. We can't go for the practical aspect at that level, whatever we are expecting from other AS. In case of other AS, there's no problem. But in case of AS14, also, chapter is very much lengthy and important. So when you will do the chapter, you will understand each and everything from very minute level. So I suggest you to wait and watch. In cost accounting, do contract costing. In amalgamation, also, in both cases, practical questions should be solved only after doing that chapter because we have very limited number of lectures with us. We have to cover each and every aspect from that point of view, whatever is required in AS. These practical questions, whatever coming in AS7 and AS14, are purely correlated with the chapters. So I suggest you to wait and watch and do it when chapters will come to us. Is that clear, beta? So any issue in AS14, AS9, I assume it is clear and okay to all of you. AS14, any concept is not clear, please tell me. Also, I would like to see the illustrations, there's no problem, but I will tell you that this illustration is to be referred by the chapter or this illustration is to be done now. Yes. AS14. Seeing your speed of problems, I think I should have to go for the next chapter, next AS. At least write that AS14 and AS9 is clear. If there is no doubt, beta, just send me a note. It's clear or not? So that I can proceed to the next AS. Fast, beta, fast. Any concept which is not clear? Dividend, very good. In AS4, Beta, you are very you're telling me to go back. Basically, that is not possible now. Do one thing. I would like to get one lecture from well, no matters. I would like to take this issue at the end of this lecture. You may remind me, Pothina Bindu, about dividend at the end of today's lecture, approximately 10 minutes before completion of the lecture. So practical questions are a bit complex at this level. Concept is clear. You need not to worry. Practical questions will be clear. Once you will, I would like to solve one question for you. You need not to worry so that it will be clear to all of you. Like this is illustration number 1 of amalgamation. Now, what is the concept in amalgamation? In amalgamation, concept is that we will have to make payment of our shareholders. So due to that reason, we are considering all that. See, here it is. What was the basic concept? See the first paragraph of this AS, you will be able to understand what is the basic concept of this AS. Yeah, AS 14 deal with the accounting to be made in the books of transferee company. So the important thing is transferee company. Who is transferee company? Purchasing company. Beta, we have to go for the accounting treatment in the books of purchasing company in case of amalgamation and the treatment of any resultant goodwill or reserves. That's it. This is the basic concept of this AS. So let's understand these two things from practical point of view. I assume that everything will be clear to you then. Because beta, for purchasing company or a transferee company, you should be very much clear. Transferee company or a purchasing company. Now here you should have to consider one thing which is very much important. Transferee company meant for the company who has purchased it. So they will have to make payment of assets and liabilities taken over. That's it. Their concept is very simple. So either you are going into the method of merger or purchase. You need not to worry. You will have to calculate the purchase consideration. That means for whatever you will pay as a consideration for purchase of assets and liabilities. So what is purchase consideration? That has been given to you. Yeah, see the definition. Consideration. That is given in your AS. Consideration. Find out where it is. Yeah. What is consideration in case of amalgamation? First, you have to understand this thing only. Nothing else is required. It means aggregate of shares and other securities issued and the payments. So that means for whatever shares or debentures, shares or debentures, security means debentures, are issued means given by the purchasing company. So issued means given by purchasing company. And whatever shares or debentures become. And the payment made in the form of cash or other assets, in the form of cash or other assets by the transferee company. Again, same given by purchasing company. To whom? This is the most important part in this case, to the shareholders. Who's shareholder? Of the transferor company. That is called consideration. That is called purchase consideration. So it means very simple. Purchased consideration means any cash or cash equivalent or oblique and any shares or debentures or other securities issued to whom? To shareholders. Now, while talking about shareholders means equity and preference shareholders of vendor company, transferor company, vendor oblique transferor company. This is called purchase consideration. Very simple, very easy, very logical. You have to just go and check it out. Who are the shareholders? Whether equity or preference, both of transferor company. So, whom whatsoever is paid to them by the transferee company, that may be in any form, that may be in the form of cash, that may be in the form of bank, that may be in the form of movable assets, that may be in the form of immovable assets, that may be in the form, in any form, or shares or debentures, will whomsoever have any money's worth, whatever is paid to them, beta, that is what, that is to be treated as a purchase consideration. So, is that clear? Purchase consideration have no relation with adjustment to reserves or with any reserve. Reserves are just a part of journal entries. Nothing else is there in AS. In this AS, reserves are the part of journal entries only. You need not to take any stress for the reserves. That is just an accounting treat. That is just a part of journal entries. So whenever you have to pass a journal entry or whenever you have to write a theory, you have to consider about the reserves. Otherwise, there is no importance of reserves for you while calculating PC. Yeah, journal entry is there. If I am receiving any reserve in my books, what will be the journal entry? We will discuss it. No matter, I am not going to close this AS within 2 minutes. As soon as much questions are there, I'll take all the questions and then we will go further. So let's do a practical question. If this is clear, I would like to go for a illustration number 1. Illustration number 1, beta. Yes, this is illustration number 1. Here it has been mentioned that A Limited is taken over by B Limited. So when A Limited is taken over by B Limited on April 1 and discharges consideration for the business as follows. Here you have to see only one thing, beta. Only one thing. Note it down with you. Whatever is paid to shareholders, that will be totaled and the PC will be calculated. So what he is interested to get from you, determine the amount of PC, purchase consideration. That is the only requirement in your examination, or except this you will get a question from theory part, and theory part is as very much clear. I am assuming from your side that you haven't asked any query from theory part, so theory part is very much clear to all of you. Practical part will be clear once you will understand how to calculate PC. So to calculate PC, just go back and see issued 42,000 fully paid up shares. Issued 42,000 fully paid up equity shares. To whom? To the equity shareholders of B Limited. So this will become part of your PC. Then issued fully paid up 15% preference share. I don't have to consider this thing. I have to consider that at which price it has been given. The logic is the price, at which price the shares are issued, not the face value of shares. Face value of share is not important for us. To discharge the preference shareholders, which is worth rupees 1,70,000 of B Limited. So there are 1,70,000 preference shares of B Limited, which are discharged at a premium of 10%. So he says that I have issued shares at rupees 100 each. But while issuing share, I have kept into mind that I will have to pay them at 1,70,000 plus 10%. So we have to add 10% in 1,70,000 because he is not going to make 1,70,000 as a payment. He will make payment of 1,70,000 plus 17, that is 1,87,000. This payment he will make to preference shareholders. But we have to check. We have to check how much payment is given to preference and equity shareholders. Totally, this will be PC. That's it. Now, number of shares is not important for us. Which shares are given to you, given to the shareholders, that is not important for us. Whether cash is given, check is given, bank is given, that is not important for us. The importance is only one thing, beta, which I have made you clear, that PC includes any cash or cash equivalent, any shares or debentures or other securities. To whom? To the shareholders of shareholder include both transfer. That's it. This is called PC. So in the given case, if you will see purchase consideration, then I will go for equity shareholders first. Whatever is given to equity shareholders or equity shares of, obviously I am talking about purchasing company, vendor company only. Whatever is given to so what is given to them? See, here it is. He says we have given them 42,000 fully paid up shares of rupees 10 each at par. At par means share of rupees 10 is given at rupees 10. So that means for 42,000 shares are given to you at the rate of rupees 10 per share. So they have given them 4,20,000. Better. Talking about preference shareholders. Now what is given to them? He has already mentioned that I have given to them 1,87,000 worth of the preference shares. How many shares? That is the second part. That is for journal entry only, nothing else. So these two things are there. Remaining, whatever is mentioned, that it is agreed that the debentures of B Limited, he says debentures of B Limited of rupees 50,000 will be converted into equal number and amount of 13% debenture. This is not a point of consideration for calculating PC. This is just a journal entry part. But for PC calculation, it has no importance at all. Whatever is given to other loan holders of the business, whatever is given to creditors of the business, whatever is given to other securities of the business, whatever is given to bonds of the business, that is not a point of consideration for calculating PC. For calculating purchase consideration, you have to consider only one thing, beta. I'm saying again and again. That's it. So this is not a point of consideration. This will be not taken into consideration. So for calculating PC, it has no importance. So this is your PC. 4,20,000 plus 1,87,000. This is 5 lakh, 6,07,000. 6,07,000. So this is a PC. Any doubt to anyone? Let's go for the doubts. Adjustment to reserves in case of amalgamation. We will discuss illustration number 2, sir. Let's do illustration number 2 after this. Sir, it would be better we can solve a practical question. Done beta, that has been done. It is on page number 1.40. वो तो मैंने कर लिया, no problem. Consideration means the settlement in exchange for allotment of shares. Yes, beta, that already made to you. When Vincent is asking PC pertaining to equity shareholders of the transferee company is settled by issuing equity shares of the to become it becomes a merger. Is it correct? Yes, beta. This is one part of your query. Sir, how beautifully you teach the concepts. This is all your vision that you are saying me that I am teaching beautifully. When ready for like 20 crystal clear. Illustration number 3 on page number 1.37, how the transaction is not treated as extraordinary item. No matters. Here I'll take first I would like to go for illustration number 2 because that will make a relation with this illustration. Let's do illustration number 2 bit. These are all your wishes which helps us to give better results or give better coaching to you, give better classes to you. Otherwise, a person who is teaching to you, if he is unable to see you, it is really difficult for him to teach. But when you are giving a good response, you are asking queries, you are giving response in this way, whatever the procedure is made by ICI, it will always be good beta. We are able to teach you better. So illustration number 2, A Limited and B Limited were amalgamated on and from 1st of April. New company C Limited was formed. So A and B are going to be merged and C is going to be formed. Now, A Limited and B Limited have the following ledgers. Ledgers are given to you. These two ledgers. Yes. Here, information is given to you. Some additional information is given to you. Prepare the balance sheet of C Limited. So balance sheet preparation is better to be understood or prepared after doing amalgamation chapter in full. But one thing we can do, we can calculate the PC, we can calculate the number of shares, or we can make the treatment or discuss the treatment of all the points, whatever is given here. Because if we'll go to prepare balance sheet, obviously it will take 1 hour, which is not practically given to us. We have been given just 1 hour or 1.5 hours to for the purpose of 1 AS, which is practically impossible, but I am trying to cover it with conceptual understanding. Number of lectures are comparatively less, or I will talk with them if some more lectures will be required because the procedure, the way I am teaching, I am taking more time. So there may be a chance that ICA may tell me that you are taking more time and you are unable to cover these AS in the scheduled time. So you may give it in the concept comment box in the feedback that teaching is very good, quality is very good, speed is okay, everything is going well. Because if you will give good feedback, obviously they will listen to me. If they will listen to me, I'll be able to convince them that more lectures are required for the AS. So let's try to understand the additional information. So for any purpose, first of all, you have to get the PC beta. Whether you are going to prepare books of purchasing company or the books of transferor company, because in case of your chapter, you will have to solve each and everything. You have to do each and everything. You must have to have the knowledge of journal entries and everything, because the chapter is already very vast and having very good importance in your examination. Approximately 20 marks of your paper come from this particular chapter only. 70 to 80% times we get one good question from this chapter. So this is a very important chapter. Once you will understand the logic in this AS, when you will do the chapter, it will be very easy for you to do, because there you have the conceptual understanding. You have to go for the journal entries, you have to go for the preparation of balance sheet, etc. And it will be a markup to the marks. So let's understand it. He says 10% debenture holders of A Limited and B Limited are discharged by C Limited. Now, whatever is given to debenture holders of A Limited and B Limited, that is the vendor company, we have no importance for these for calculation of PC. These are the journal entry part. Whenever we will pass journal entry, obviously we will do it. So next is preference shareholders of the two companies are issued equivalent number of 15% preference shares at a price of 150 per share. So these are given are issued equivalent number. So for this purpose, just see, because this is a part of PC, just see how many preference shareholders are there in previous company. In previous company, there are 12% preference shares of 300 lakhs because rupees are in lakhs. Okay, so 300 lakhs and 200 lakhs, and he is interested that equivalent number of shares are to be given. So for that, first of all, you have to calculate how many equity preference shares are there earlier. So whatever preference shares were there, it is 300 lakhs. These are the value of preference shares, face value. Now see, 100 each, preference share is worth rupees 100. So that means for, if we are interested to calculate number of preference shares, it will be 3 lakhs. One, two, three, four, five. So this is 3 lakh shares. So it means for preference shares will be given 3 lakh shares at the rate of rupees 150 each. He has mentioned you particularly that they will be given price shares at the rate of rupees 150 per share are issued equivalent number of. So that has been clearly mentioned. And while talking about B Limited, this is given to A Limited preference shareholders, then given to B Limited preference shareholders. That is also to somehow same because there are 2 crore is the value of preference shares divided by 100 each. So there are 2 lakh shares at the rate of 150 each is to be given. So here also 3 lakh shares of rupees 150 each. So here face value is 100. 50 will be shown in premium. So that is the accounting part I have already mentioned you. While preparing balance sheet, you have to bifurcate it 100 in face value, 50 in premium. So in purchasing company books, this will be like this. This is just accounting part. For our purchase consideration purpose, it is very much clear that the value is 450 lakhs. And here it is 300 lakhs. I am talking about two companies, the calculation of PC for two companies simultaneously. Yes, C Limited will issue 5 equity shares for each equity share of A Limited. Means for each equity share, one equity share of A Limited will get 5 equity shares of C Limited and 4 equity shares for each equity share of B Limited. And the value of share is 30 and 10 each. 30 each. Face value is 10 each. That's it. So 5 for every one share. So how many equity shares are there, beta? There are 800 lakh equity shares or 8 lakh. How many equity shares are there? Equity share worth rupees 100 each. Equity shares of A Limited and B Limited are worth rupees 100 each. So if they worth rupees 100 each beta, that means for now whatever we are issuing, those will be those have the face value of 10 each beta. See here it is given to you. Face value is 10 each. But shares against whom it is issued is worth rupees 100, having face value of 100 each. And whatever shares are issued, their face value is 10 each. Due to that reason only they have given them more number of shares. You may see here it is. So 5 for every one share and 4 for every one share. 5 for A limited, 4 for B limited. These are 800 and 750. Equity shares. A limited, B limited. Now whatever we will give them, we will give them. For that, first of all, check the total number of shares. That is 800 lakhs divided by 100. 750 lakhs divided by 100. It is 8 lakhs. It is 7 lakh 50,000. These are the number of shares. And how many shares will be given to them? They will be given number of shares issued by C Limited against one share. Against one share, he will be given 5 shares and he will be given 4 shares beta. So total number of shares issued how many number of shares will be issued? 8 lakh into 5 into 30 because the value चलो into 30 बाद में कर लेंगे, we'll do later. So this is 7 lakh 50,000 into 4. So 40 lakh shares are issued and 3 lakh shares, 30 lakh shares are issued. So value of shares issued, multiply it with into 30 because every share is worth rupees 30 each. So it is 90 lakhs. It is 120 lakhs. Assume everything is clear till now. Meghna, you have done correctly. Very good. Total PC we will calculate, no matters. Till now everything is clear. You may note it down whatever is mentioned here. So what will be the PC, whatever is given to preference and equity in total. So you may have to total them. Make it total. We have given them 450 lakhs of preference shares and 300 lakhs of preference shares. So to calculate PC of A limited, what do you have to do? 120 plus 450 lakhs. For B limited, it will be 90 plus 300 lakhs. It is 390. It is 570. 1200 lakhs, 40 lakh into 30 lakhs. We have to make 40 lakh into 30 lakh, beta. 40 lakh into 30. Okay. 40 into 3. हाँ, बिल्कुल सही है. You are correct. This is 900 lakhs. Calculation is not my part because when I am trying to let you understand each and everything, calculation will be your duty. Make fast calculation and give me the answers. Because if I will try to make calculations, then obviously I am unable to let you understand each and everything. 1200 lakhs. Very good. 900 lakhs. So PC will be 1200 plus 450, it will be 1650 lakhs. And here it will be 300, 900 plus 300. It will be 1200 lakhs. Is that okay? In case of merger, the transferee company gets some benefit, like PC paid is less compared to the net asset acquired, then how this profit will be shown or loss, otherwise vice versa. Because whatever profit or let's try to ask me one thing, whether everything is clear till now. Karthik Gupta, now coming to your point. Karthik is asking one thing, that in case of merger, how profit or loss on this acquisition will be treated. I have already mentioned you that whatever adjustment is there, that will be automatically done in profit or loss account. Automatically done. You need not to worry. While passing journal entry, whatever difference will be there, that will be adjusted in that particular, you may say, profit or loss account. Actually, transferee company is doing one thing. It is debiting all the assets acquired by him, assets debit to liabilities. If it is taking reserves also, it will pass to reserves. So whatever is the balance sheet figure, that will be automatically adjusted in profit or loss account, because profit or loss account is also a reserve. So whatever is balance sheet figure, that will be adjusted in it. After adjustment of PC to transferee company, transferor company, sorry. That is purchase consideration. So if assets are taken worth rupees 100 crores and liabilities are taken worth rupees 30 crores only, and reserves are of rupees 25 crores, and transferor company is paid, you may say, for rupees 70 lakhs, because I have already mentioned you, assets are to be taken at a book value, liabilities are to be taken at a book value, except only minor adjustments are allowed, which are relating to due to the reason of uniformity of accounting policy. So in this case, balance sheet figure will be 25, that will go to profit or loss account, that will be debited. Obviously, whatever reserves we will take, that will be debited. So this will be the answer. This will be the way how accounting treatment is made in this case. But in case of in the nature of purchase, there will be some difference. Assets account debit to liabilities account to transferor company. This will be PC. This will be the taken over price, obviously, and this will be the taken over price. You may assume that whatever is the difference, that will go to goodwill if debit. If it is credit, then it will go to capital reserve. If credit, then capital reserve. Like here 120 lakhs, here liabilities are worth rupees 60 lakhs, and he has been paid 80 lakhs. So 20 lakh will go to goodwill. If payment is more, then obviously we are suffering and that loss will go to goodwill. If we are paying less, then that will be our profit and it will be credited to capital reserve. If it will be not 80, it is 40, then obviously 20 lakh will be credited to capital reserve. Is that clear better? Clear. But the debenture point is not clear. But one thing is you should have to keep it into your mind. Debentures are just for accounting treatment purpose. But you have to do it for the debentures. Whatever is given to debentures are actually, we are assuming that these are the outsiders. And whatever is given by the company, new company, that is purchasing company, transferee company, that will be given directly to them. So transferee will pass an entry in its books that I am paying to the debentures of that particular transferor company. How he will pass the entry? He will write debentures of transferor company, and it may be creditors or creditors or loans, whatever it is, of transferor company. It will debit to it. First of all, it has been taken over to whatever is given to them. Just assume they have been given debentures in new company. So debentures. So if debentures of transferor company are worth rupees 1 crore and they have been given debentures in our company worth rupees 60 lakhs, so 40 lakh will be our profit. If we have paid them more, then 40 lakh will be our loss. That may be anything. But here it will not be 1 crore. Here it will be 60 lakh only. Why? Very important point. See, here it is what I have done. I have credited liabilities. I have created liabilities here also. So when I am creating liability, these are to be created at taken over price, not at the book value, because obviously whatever price is fixed, that will be used here. So that will be taken at taken over price. These liabilities includes debentures, beta. These liabilities includes creditors of transferor company. So I have already mentioned you that these concepts will be more clear when you will do the chapter, because while doing the chapter, teacher will let you understand the journal entries. So when you will understand the journal entries, you will be more easy to understand these concepts. Till now, whatever you have done, that is from theoretical part, and here theoretical part is more important because this AS is for theoretical part. Yes, they have given you some illustration by assuming that you have done the AS, you have done the chapter also, but you know it very well that you have not done the chapter. Whether lectures for that chapter has not yet been delivered to you, no? You may check it out in your syllabus. Amalgamation is there, your chapter, and that chapter is very much important. I already mentioned you, so need not to worry. I assure you that you will be very much clear on all these things. Unlimited purchase, okay, clear. Thank you. Why debentures are not coming under PC? Because this is written in AS beta. According to AS here, it is very much clear debentures are not to be taken into PC. Instead, that will be taken as a liability taken over. That is coming into your books. Purchasing companies taking it over as a liability. Purchasing company is not taking over debenture, is not taking over shares in this entry. That will be taken separately. They are taking over liabilities in this. So liabilities are taken over as it is. I am taking over the liabilities. That is my duty to dispose of. This has been done for the specific purpose. Try to understand the purpose. Actually, what happens? Those which are the outsider liabilities of transfer company must be paid properly, because they have to be paid in a proper way. Due to that reason, government has made it mandatory that these liabilities are to be taken over by the purchasing company and paid by them directly, so that there must not be any loss to those outsiders, because outsider liabilities are very much important. While talking about these the equity shareholders and preference shareholders, they're the part of ownership. So earlier what happened, owners take the amount from transferee company and distribute it as per their wish. So that creates a problem, because in this case they will pay less to the outsider liabilities and more to the insider liabilities, because they will do some such adjustment that the benefit automatically goes to the equity shareholders and preference shareholders, because who are going to close the company, who are going to transfer the company, actually this is to be done by the shareholders. because they are the right decision makers, board of directors, and all these are the part of management. And management will always go in favor of their equity shareholders and preference shareholders. Whereas government is not interested to do this, because government says all losses will have to be borne by the equity shareholders or preference shareholders only. Due to that reason, whenever this type of amalgamation comes into the picture, debenture holders or all outsider liabilities will automatically transfer to the transferee company, and transferee company have to settle them and satisfy them. If they will not satisfy them, they will not allow, they means debenture holders will not allow the company to be in the merger, to be in the process of amalgamation. They will stop it because they have many legal rights with them. So to satisfy them properly, to be paid to them properly, this procedure has been followed. So I assume that I am able to let you clear. That explanation is very clear, sir. That point is very much clear. Okay, beta. My further doubt is last in this illustration too. It is the nature of merger as well as all the conditions seem. Yes, sir. Why difference between is written in goodwill for A limited? Just a moment. I would like to see that beta, because I have not discussed regarding this point. Yes, A limited and B limited were amalgamated. A new company was formed. Okay, good. Beta, it is specifically mentioned in the question that it is amalgamation in the nature of purchase. Beta, we have to use our mind that it is amalgamation in the nature of merger or purchase, but only in case if it is not mentioned. If it has been decided by the companies that we were going to make amalgamation in the nature of purchase, how we can change it by saying that you are fulfilling the condition of merger, go for merger? No, 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 no. Merger and purchase will be checked by us only if nothing is mentioned. That what is the nature of amalgamation in the given question? If it has been specifically mentioned, beta, that it is amalgamation in the nature of purchase, you have to assume it as purchase. If they say it is in the nature of merger, you have to assume it as merger. But in that case, conditions must be fulfilled. If because in case of merger, conditions are required to be fulfilled. What is purchase? If it is not a merger, it is purchase. If it is not a merger, it is purchase. That means for there is no condition for purchase. So they may assume anyone as purchase. There is no problem. But merger is to be taken properly. Is that clear, beta? Let's go for the next. Yes. Have you read this AS? AS 17? Those who are satisfied with, from my teaching, they must have to give feedback to the ICI, because feedback is required to ICI. To me, it is good, but practically, whenever you will get that link of feedback at the end of this lecture, maybe that has been given to you. So you should have to do that. That will be helpful to ICI only, as well as they will understand that this thing is better. They have given me AS first time. Earlier, AS was done by some other faculties also. They have told me that students are unable to understand the AS and normally leave the classes of AS. So they have given me this opportunity to enter to discuss these topics with you. So this is a good opportunity for me also, because as a teacher is always interested to have students who can be satisfied in an easy manner. So very good. Karthik has read it. Anyone else who have read AS 17? AS 17 beta fast. Tell me who has read it and who hasn't read it. ES 17 is somehow a different ES. I can say that this ES is not like the previous ES because previous ES are normally relating to the detailed aspects and many other things are required. In this ES, you can understand this thing. This ES is not like other ES. Why? Because here we have to understand the definitions only. We have to understand the aspect only. Not too much. You may say earlier ES was already done by you at some level. It was that have some relation with your previous studies also. This ES have no relation with your previous studies. Let it be very much clear. Going to be a somehow lengthy ES, somehow AS which is not done by us. Due to that reason, we may assume that it will be difficult, it may be tough, or it may be boring. But I would like to tell you very clearly that this AS is going to be the best AS till now. This AS will be going to the most easiest AS till now. Just you have to do one thing, take it very seriously, and expecting that this will be beneficial for you. One Shakti Velan. Loss is treated as goodwill in purchase or merger, sir. Loss is treated as goodwill in case of purchase, not in merger. Okay. Try to read next years also whenever you are coming to me, because that will be advantageous for you to understand that ES in an easy manner. So let's understand it. Here, ES is basically made for the purpose of reporting part only. This ES is not of the part as earlier ES was there. It is just for the reporting part, beta. Reporting, what means for reporting? Reporting means to give disclosures, to give details and disclosures. So let's try to understand this ES from that angle. Here the word segment is there, beta. First of all, what means for segment? Segment, you will go into a departmental store. In that departmental store, you will see there are various segments they are dealing with. They are dealing with ladies wear, gents wear, kids wear, and you may say some more items may be there. Let's assume that there are three only. So this departmental store have three segments. That means for segment means for what? Those parts of the business which differs from each other due to its nature, due to its working style, due to its features. It differs from the other. And another businessman is there. It is working in India, in Canada, because this name is nowadays very famous. In Punjab, it is very much famous. In Delhi, it's very much famous. Everyone is interested to go to Canada. So I'm writing here USA, UK. So this company is working at international level and working in various areas, various countries. So in this case, this is a segment. This is one segment. This is segment 2. This is segment 3. This is segment 4. But the difference is there. Here, in the previous case, I'm talking about segments according to the nature of the items. So this is called business segment, beta. Where segmenting is made on the basis of business. Different businesses are there, like ladies wear, gents wear, kids wear, or even there may be a chance that I am doing in ready-made garments. Second is I'm dealing in shoes. Third is I'm dealing in somehow eatables like grocery items. So in this case, business segments will be ready-made garments. Second is shoes. Third is grocery items. So there are three segments in this way. These are business segments. Those segments which are identified on the basis of their business are named as business segment, and those segments which are identified on the basis of their area are named as geographical segments. Here segmenting is made on the basis of geography. As we have earlier discussed in our classes before 10th, that there is a subject named as geography. That means for geographical areas are very important, that this area belongs to UK, this area belongs to Canada, India, all that is there. This is the geography. So due to that reason, these are called geographical segments. Is that clear? So coming to your ES now. In this ES, he has mentioned you that here, what is the objective? Objective is to establish reporting of financial statements. Why reporting of financial statement is important? Basically, what happened? We think government thinks that there's a why we are preparing financial statements, beta. Tell me why financial statements are prepared. What is the purpose? Tell me. Purpose of financial statements. I'm asking from you, beta. Tell me. I have discussed in my first lecture also. If you remember my first lecture, you may check it out. I have discussed this thing. In my first lecture, I have discussed with you that we are preparing financial statements for the help of users. Who are the users? Internal and external. What they require is, why they require is, they require this information for the purpose of taking decisions. Is to see whether our business is operating efficiently or effectively. Beta, it can be mentioned in other way also that I have discussed in my first lecture also, that in 1966 definition is given by the AAA, American Association of Accountants. In that definition, it has been made very clear that the process of identifying measuring, and communicating economic information to permit informed judgments and decisions by the users of accounts. Identifying, measuring, and communicating economic information to permit just a moment. To permit informed judgments and decisions by the users of accounts. This is the most important definition from examination point of view, knowledge point of view, concepts point of view. What is the definition? Definition says it has been mentioned by American Association of Accountant in 1966, which is assumed as the worldwide accepted definition of accounting. It says there are some users of accounts. What are the users? These are the internal and external, as we know. Internal are the management, owners, key personals, all that. And external are the debt. debenture holders, outsider liabilities, loans, creditors, suppliers, all that. So they all need information for that. For what purpose? They are interested to have judgments and decisions. Why they have to take decisions and judgments? Obviously, they have to work with the company, so they need information. So whatever information is economical, whatever information will affect their decision, that must be given to them. Whatever information is there in business, which is required to them, is to be given to them. So on that basis, this segment reporting AS is made. In this AS, it has been seen that a business is doing various, working in various segments. It is earning a profit of 1,000 crores. Now, it is earning a profit of 1,000 crores, it's okay. But there may be a chance that one of its segment is running in loss. Like in UK, it is running in losses. In India, it is running in profit. In Singapore, it is running in Canada, it is running in profit. In Canada, it is running in profit. In USA, it is not earning any profit, not suffering from any loss, but it is doing it for the favor of that country. It is doing it for the favor of something else also. Now, users need the information. Users are basically the shareholders and the debenture holders and the loan seekers, loan givers to the company. They must be given proper information that if they are expanding their business in USA, where they are suffering from already suffering from losses and interested to have a share issue for that. In that case, obviously people will not go for that share issue because people will have to suffer the loss. I'm saying again, if a company have a segment in USA and that segment is running in losses, total profit of the company is 1,000 crore. But actually, what happened? Company has earned profit of rupees 1,200 crores in India. It is a profit. But in USA, it has suffered from loss of 200 crores. Now, what company is going to do? Company is going to expand its business in USA. For that purpose, they are going to bring a issue. Whether that issue is to be taken by the public or not, public is unable to understand this loss of 200 because if segment reporting is not there, what will happen? People will see this 1,000 crores of profit. Company is in profit, so people will take their issues. Debenture holders will take their debentures. Those who are interested to give them loan will give them the loan because they will see the profit only. But in case this reporting is made that in India we are earning a profit of 1,200 crore, in USA we are earning a loss of 200. Obviously, in that case, it will be a material impact on the decision making of the users that whether they have to help the company for working in USA or not. Because companies trying to, maximum companies are trying to, you may say, hide many important informations from the public, from the loan holders. Because this all happens. If you will remember, obviously you was very small at that time. At that time, I was in Delhi studying for the CA classes. Because in 2001, I was preparing for CA final. At that time, Satyam scam was there. In that scam, only one thing was there, that was proper information is not disclosed in the financial statements. Financial statements are showing more and more profits by making some adjustments. Due to that reason, maximum loans have been taken from the public, from the you may say banks, and public and shares from the are issued to the public. Simultaneously, many contracts have been taken in the USA on the basis of those balance sheet. So all that was a part of balance sheet. Mr. Raju was the owner of this company, and it was very much clear later on that this all happens due to the reason of you may say hiding many important informations from the users. So due to that reason, it has been made mandatory after that that number of information are required to be disclosed. Out of that, this information is very important regarding segment reporting. Every segment is to be disclosed properly. Either it is a geographical segment or it is a business segment. So whatever profit or losses we are earning, whatever many disclosures are required, I'll discuss with you. So this is the main purpose. Beta. Very good. Very good. Your contribution is very good. Vincent, Meghna, Prabhas, you are all right. So I think objective is very much clear. The principle of reporting financial about the different types of products and services an enterprise produces and the different geographical areas in which it operates. It operates. Okay. So it will help in better understanding of the performance of the enterprises. One thing, this is to be remembered by you. It is a part of remembrance now. Why this disclosure is required, why this reporting is made. So three parts are there: better understanding, better assessing the risk and return, and make more informed judgments about the enterprise as a whole. So these 3 points are important. These are the basically three purpose for which this AS is made. Now this is mandatory for whom? SMCs means small and medium sized companies. Small companies which are whose revenue or turnover is less than 50 crores and medium is less than 250 crores. So this is not mandatory for small and medium sized companies. Obviously, those which are not small and medium means large companies. In case of known companies means which are not company, again same thing, whose turnover is more than 250 crores. So level 2 and level 3 are the businesses where turnover is more than 250 crores. So it will be applicable to big companies, big businesses only. It will not be applicable to small ones. Let it be very much clear, beta. We have to fulfill the requirements mentioned in it. If a single report contains both consolidated and separate financial statements, segment information need to be presented only on the basis of consolidated. This is the important point. He says we are preparing financial report of A Limited. Here he is talking about something different which is not clear to anyone, I assume. Single reporting financial reports and both consolidated financial statement. That means forward. If a company is there, A Limited, it is preparing its books of accounts. Everyone knows it is preparing its financial statements. Simultaneously, A Limited is the holding company of B Limited and C Limited also. In that case, it will prepare a consolidated financial statement also. So, which will be taken as a base for all decision making? What will be taken as a base? Whether A Limited financial statement, single financial statement, or consolidated one. So everyone must have to understand this thing. This will be completely based on consolidated financial statements. So whatever decisions are to be taken, that is on the basis of consolidated financial statement. Business segment, I made you clear, beta. It has been made clear. It is distinguishable component of an enterprise. Obviously, when one business is different from other, then they are named as a business segment. It will be depending upon the nature of the product or services. And nature of product and services includes, if we'll go into the bank, nowadays banks are providing many services. They are providing insurance services also. They are providing banking services also. They are providing many public utility services also. So that is all depending upon their working, but it means for they are dealing in various type of activities. So there are different segments. We will assume that one is banking segment, second one is insurance segment, third one is public utility segment, and keep them separate. Nature of production of processes means whatever the production process is there that is different from all these, then we will treat it as a separate segment. Then method used to distribute the product or provide the services. So whatever the method we are using for providing that service, that will also be taken as a base for the purpose of allocating segments. Like I am doing a business, like a institute is doing a services, providing a services. One services they are providing offline classes in all over the India in its institutes. Second, it is providing online classes to all over the world. The method of delivery is completely different. Teachers are different. Complete system is different. Maximum services, maximum features and maximum working process is different. Yeah, management is same. Even then, online may be treated as a business, different business segment, and offline classes may be treated as a different business segment. This type or class of customer also you must have to consider this thing that offline classes customer and online classes customer may be separate. So type or class of customer will also be taken as a base for the purpose of allocation. Geographical segment I already made you clear. It is completely based on geography. Now, how we will identify that this segment will report its, it will be assumed as a reportable segment. One thing is segment. Second thing is whether its information is to be reported separately or not. Means we have decided that this is our segment. Like in this case, beta, we have decided that this is UK segment, this is India segment, this is Canada, this is USA. Now, whether we have to give reporting of each and every segment separately or not, that is depending upon some features. Whether UK is to be disclosed separately, whether India is to be disclosed separately, Canada is to be disclosed or not, that is based on some features, and that features I'm going to discuss. First feature is if revenue means sale, income, in any way, whatever income or revenue we are generating from that business, that is called revenue. You have to calculate the total revenue of all segments. First of all, you have to calculate total revenue beta of all segments. All segments means if we have four segments like this, I have already mentioned you, UK, India, Canada, and USA. If we have four segments, so you have to calculate the revenue of these all four segments, and then you have to check that revenue of which segment is 10% of or more of total. Like this, I'm talking about revenue now. Oh. Revenue of UK is 100 crores, USA is 200 crores, India is 500 crores, Canada is 50 crores. So total revenue is, take it 200, it will be easy. 1,000 crores. So this is 10% of total revenue. How I have calculated? 100 divided by 1,000. This is total revenue. This is UK's revenue. This is 20%. this is 50%, that is 20%. So if the revenue of any segment is 10% or more, is 10% or more of the total revenue of all segments, then that segment will be assumed as a reporting segment. Means UK will be assumed as a reporting segment, USA, all segments. All segments will be assumed as reporting segments. That it means. Let's try to understand this thing. Uh, Rahul, we have discussed only this thing in brief, that why we are doing this segment reporting, so that decisions of the users can be taken by the users properly. So for them, we are interested to give them the proper information. For that purpose, we are interested to understand which segment is a reporting segment. Reporting segment means for those segments whose revenue is 10% or more of the total revenue of all segments. So assume it is clear to you better. What's general purpose financial statement? Basically, whatever we have discussed or studied till date about the financial statements, that is called general purpose financial statements. Means which has been prepared for routine, that we are doing in since +1 to till the date. That is all general purpose. Second is revenue test, that is profit or loss. 10% of higher of segment in profit and loss. How it is to be checked? Assume here UK. Let's take an example of now business segment, because that will be something new now. I'm taking a segment where one is I'm dealing in clothes, second I'm dealing in shoes, third I'm dealing in take one another segment, clothes, shoes, and grocery items. So there are three segments, business segments. Now, whatever is a profit or loss, that we have to check. From cloth, I have earned profit of 200 crores. From shoes, I have earned profit of 100 crores. From grocery, I have earned profit of 20 crores. So I have to make total. It is 320. So get percentage. It is 200 divided by 320. How much it is? Get it better? Fast. Karthik, you are right, beta. How much it is, beta? Get it fast. Whether I have to calculate or you may give me the answer. Fast. Karthik, very good. Shoes. अरे भाई कोई आंसर नहीं दे रहा, डू इट फास्ट बेटा, बाकी लोग भी आंसर दो, ऐसे तो आप लोग फिर नींद में चले जाओगे, सो जाओगे आप लोग. वेरी गुड. आंसर तो मुझे पता है, लेकिन मैं आपसे चाहता हूं तो आप ही दो. वेरी गुड. कुछ ने आंसर दिए. मेघना गुड, जाग गए. मेघना भी जाग रही है, पुथीना भी जाग रही है, काशनील, श्री राम जी भी जाग रहे हैं हमारे. पेंड्रेडी भी जाग रही है, कार्तिक भी जाग रहे हैं, बहुत लोग जाग रहे हैं, बट कुछ लोग सो रहे हैं मुझे लग रहा है, जिन्होंने आंसर नहीं भेजा। तो सभी लोग आंसर भेजो ताकि पता लगे कि कौन कौन जाग रहा है। सोना नहीं है बेटा, मुझे पता है एएस में नींद बहुत बढ़िया आती है। अगर आपको रात को नींद ना आए तो एक काम करना, ये एएस का लेक्चर लगाना और आराम से सुनना, बहुत अच्छी नींद आएगी। एनीवन हैविंग एनी प्रॉब्लम इन स्लीपिंग may get very good sleep. वैसे तो I know it very well that you people have a good sleep because your age is of that where sleeping is a you may say enjoyment. So reporting of it is required because it is more than 10% or more. It reporting of this is also required. So these two will go for the reporting. This will not to be required for reporting. According to this concept, whatever we have discussed, if segment result is equal to or more than, here it is given equal to or more than 10% of higher of the segments in profit or loss. We will understand it in detail also, no matters. Then segment assets. If asset of one segment is 10% or more of the assets of total segments, even then it is required to be reported as a reportable segment. If assets of one segment, let's assume segment A, B, and C, there are three segments. Assets are 2 lakhs. It is bad to be written because it is not practically possible, because such company is not going to report it. It will be 200 crores, 500 crores, and 40 crores. So get it total 740. Give me the percentage fast. How much is the percentage of A, B, and C segment? Fast, beta. Karthik answer is very enjoyable. He says, "No, sir, it's not boring. I am watching it as a family show. My sister is sitting with me, listening to the lecture. She's not even doing CA. Good, very good. Really enjoyable. Good answer. So send me the percentage also, fast beta. Obviously, when she will take the go to that age or class, she will go for CA. 27.03%. Good. 67% approximately, no matters. 5% approximately. So this is a reportable segment, this is a reportable, and this is not. This is not required to be reported. These are to be reported as a reportable segment. So this is clear according to my opinion. Now, fourth is, which is very good thing, management may designate any segment as a reportable segment despite its size, even if tests are not satisfied. Means management have the choice to go for any segment as a reportable segment. These three, whatever is mentioned here, are as per the government norms. Government says this is mandatory. But if you are interested to make more segment like this segment, if you are interested to make C as a reportable segment, it is up to the choice of the management. If management is interested, they may treat it as a reportable segment. Management is interested, they may treat grocery as a reportable segment. If management is interested, they may take here, this is not there. Yeah. So it is up to the choice of management. They may treat any as a reportable segment. Till now, it is clear. I assume have a break, have some breakfast, minor breakfast, small breakfast. Then we will come after 10 minutes. Okay, then after 10 minutes, we will be there once again. Welcome back after the break, beta. So, already discussed many important aspects of this segment reporting. Now, some logical information is given here, which I would like to discuss with you. Yes. In this, we have already discussed regarding the percentage system. Yes. One thing is more important, that total reporting segments must be that which will cover 75% of the total enterprise revenue. If we'll talk about the revenue, then we were discussing that 10% or higher of the total revenue will be a reportable segment. In addition to this, one more condition is there. There is another test that is 75%. 75% test means for if external revenue of reporting segment is less than 75% of the enterprise source revenue, previous year segment information to continue in current year, if inconsistent previous year figures to be regrouped to fall in the line with current year. Means what it means. If total external revenue constitute less than 75% of the total enterprise revenue, additional segments should be identified, even if they do not meet the criteria of 10% threshold in other tests, until at least 75% of the total enterprise revenue is included in reportable segment. Read these lines once again. I would like to let you be clear on this. Just read it once again. Have you read it? Then see this. We have taken this example. In this example, we must have to check one more thing. This was the revenue based example. In this, one thing is to be checked, that the total revenue of all reportable segments must be 750. This is a minimum requirement, must be 750 or more, not less than this. In this case, it is not a problem because we are reporting all the segments. But in case there is some change, like in case of UK, the turnover is 40 crores. In USA, the turnover is 300 crores. In India, turnover is 1,000 crores. In Canada, turnover is 500 crores. Uh, it is 200 crores. So there is a change. Now there is a change. Just a moment. Give me a minute. Yes, back to the pavilion. Now here the important thing is, what is the total? Tell me. Total is 1540. Now if total is 1540, make it some more easy because it will be difficult to calculate. Let's take it 100. Then it will be 1600. Now what will be the reportable segment? Tell me first. What are the reportable segments? Tell me. What are the reportable segments? Fast. Your speed is slow, or my net is slow. My net is slow, I assume. So let's all except UK. Okay. Suranshu says all except UK. Or Bindu says USA, India, and Canada. Remaining. अरे भैया बाकी भी बोलो बोलो भी बोलो फास्ट 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 it is yes 6%, it is approximately 6, it is approximately 19%, it is 62, it is 12. Okay, USA, India, and Mr. Station except UK all. Good. Now change it. UK 100, USA 120, India 800, Canada 100, no, this will not going to become a good example. It will become like this. Here it is 1800. Now get the total. 2120. Now tell me, what are the reportable segments? Very good, very good. I take the doubts just a moment. Let's try to understand the calculations first because which is important here. I'll come to the doubts part also. Tell me fast. It is easy to get. I would like to give a suggestion. Make it 212 as 10%. So whomsoever more than 10%, we have to get it. So this is not a reportable segment. This is not a reportable segment. This is not a reportable. This is the only reportable segment. Very easy to get. Just make it 10%. That's it. That is always easy to get. 2120 divided by 10. It is always easy to get it. So only India. But in this case, one more thing is to be checked. You will have to check that how much percentage is covered by India only. So that is 1800 divided by 2120. To get it, how much percentage it is? It must be at least 75%. It must be at least 75%. So it is 85% beta. So it means so there is no problem at all. It will be easy to understand. It's clear to you? Yes, yes, very good, very good. So we need not to calculate for others. It is only sufficient that if it is covering reportable segments covering 75% or more, that's okay. Now, if UK 400, USA 500, India 5000, Canada 4000, another country is there, Australia this will be So I assume that everything is clear. थोड़ा और हम लोग examples तो आ जाएंगे और भी. It should be more than 75%. That you should have to check. That is an important part. Now get it total. $840. Now here, India is a reportable segment as it covers 50%. Whomsoever is, okay, take it as 80. This will be a better example. Actually, I have to frame an example for you now so that you can understand it in a better way. Yes. Now it will be easy. It's 820 is the total. Whomsoever is 82 or more will be covered. Only India is 82 or more, so it will be covered. But it covers only 50% better. So here the condition applies that 75% must be the minimum reportable segment, which is not yet satisfied in this case. So what you have to do is you have to add more segments. It is mandatory in this case. It is mandatory. You can't leave this. So for that purpose, what you have to do? You have to add more segments to cover that 75%. To cover that 75%, you must have to reach 750, not less than 750. So 500 plus, if you will report. Now it is the discretion at the discretion of the management that whomsoever they are interested, they may add it. But minimum reporting must be 75% or more. So they will add this UK, they will add USA. Even then, it is 160 only, which has been added. Whereas we have to add 250. This has been added. Now, after adding all these, it will be till now it is 740. So it is not practically feasible. No, you have to get 75%. Sorry, 75% is not 750. Get 75% of it. How much is the 75% of 820? 75% of 820. It will be 615 maybe. Am I right? Check it out. $615. Exactly right. 75% is 615. So to add more, you have to add minimum 115. So that 115 can be added by adding UK and USA, or UK and Canada, or USA and Canada, or Australia and USA, means any combination. Minimum two must be added so that our total will go exceeding rupees 620 crores. So if we will add these two, 160 is added. So after adding 160, our condition is satisfied. That is 500 plus 160, it is 660. So this condition is satisfied. So this is our requirement, minimum requirement. This is what 75% condition is there. Assuming everything is clear on this, 750, 75% of 820 exactly. Now I'm going to take some doubts, whatever doubts has come till now, so that I can understand, I can let you help. What is meaning of external revenue? To which revenue we should apply this limit of 75%? External revenue means for we must have to reduce inter segment transfer. Number of times it happens that our one segment is transferring goods to other segment. So at that time, that is to be reduced to calculate the limit of 75%. That means for external revenue, we will discuss it in detail. What is meaning of proximity of operation in respect of geographical segment? Proximity of operations meant for whatever operations they are doing, they are working in any particular area. Working is called operations. Proximity means for when we will make it total. That means for proximity. What is meant by proximity? That has already been discussed. Illustration number 3. They are uncontrollable. Here, we may take it at the end. This is not now in relation to this. Yes, individual segments having asset, profit, or revenue greater than or equal to 10% of the total, then segment reporting is required. Is it? Is not it, sir? Yes, beta. But we have to make some changes in it also within few minutes. To discuss it in detail, I would like to take an example. One example is there, illustration is there, which is very important, and I would like to discuss it with you. That is in the detail of AS. I would like to change your understanding in relation to percentage to be calculated for profit or loss, because that is something important which we have to discuss now. Asset is okay, that is clear to everyone. 10% or more. Revenue is okay, 10% or more. Regarding profit or losses, you should have to understand once again, because that is to somehow advance. Till now, I have discussed only the basic meaning of that. For that purpose, see illustration number 1 of your module. Yeah. For this purpose, you have to do this. Yes. Read this paragraph. Which is important for you. Very important. Because this will come into your exam. Normally, this type of things comes into the exam. What it meant for. Note it down in your copy, because this is very important. If there are profits and losses both of various segments, there may be a segment which is suffering from a loss, another segment is turning into profits. Then what you have to do? You have to make the you have to calculate the total of profits separately, total of losses separately, and then calculate whichever is higher. That will be taken as a base for calculation of segment reporting concept. Like in the given case, if you will see in illustration number 1, tell me how much is the profit and how much is the loss, beta. How much is the total of profits? To calculate the total of profit, add this 100. Profit is, to calculate losses, $300. Whichever is higher, this is 300. So 10% of it, 30. So here 30 will be taken as a base for checking the reportable segment, for finalizing the reportable segment on the basis of results, on the basis of profit or loss. Result means for profit or loss. So whomsoever is suffering profit or loss of 30 or more, of 30 or more, will be a reportable segment. That it means for. What you have to do is, okay, this is not, okay, sorry. This is not to be taken because this is a total. This is 200 in total. 10% is 20. So 20 or more. Whomsoever is 20 or more will be treated as a reportable segment. This is a total basically. No? This is not to be taken into consideration. I have not read the question for you. No? Due to that reason, there is a problem. Because if I read the question, obviously I will be easy to understand it. But no matters. So this will be a reportable segment because it is 20 or more. This will be a reportable. And this will be a reportable. So there are 3 reportable segments. Get it total to check the limit of 75%. But 75% limit is not for this results. 75% is for revenue only. That is not for profit or loss. 75% limit is basically only for revenue beta. Let it be very much considered. 75% limit is not to be checked for results or assets. It will be checked for revenue only. So in this case, on the basis of results, M, N, and R, these 3 are reportable segments. Tell me which are the reportable segments on the basis of assets. On result is clear now? Are you interested? Let me understand you once again, or is it clear? Profit is to be total. बेटा इसमें सिंपल है, प्रॉफिट को अलग से टोटल कर लेना, लॉस को अलग से टोटल कर लेना. जिसका टोटल ज्यादा आएगा उसका 10% निकाल लेना, और जिस सेगमेंट का प्रॉफिट या लॉस उस पर्टिकुलर लिमिट या उससे ज्यादा है वो सारे रिपोर्टेबल सेगमेंट बनता है. जैसे इस केस में क्या था, 100 आपका प्रॉफिट है टोटल और लॉसेस 200. हायर लॉसेस है, उसका 20% 10% निकाला, 20 आ गया. तो 20 और मोर, चाहे प्रॉफिट हो चाहे लॉस हो, जिसका भी है वो रिपोर्टेबल. तो इसका 20 या जिससे ज्यादा है ये रिपोर्टेबल बन गया, इसका 20 से ज्यादा है, इसका 20 से ज्यादा है. तो ये 3 रिपोर्टेबल सेगमेंट बन गए. बाकी सब बेटा आपके जो है वो नॉन रिपोर्टेबल. इज इट क्लियर? इन केस ऑफ एसेट्स, reportable segments are whose assets are 10% or more, beta. Hitesh, and rectify your understanding. Let it be very much clear here. Due to assets, MNOPQ, five are the reportable segments. MNOPQ. These five are the reportable segments because 10% or more. So this is 10% or more. This is, and this is. On the basis of revenue, reportable segments are whose 120 or more. So these two are reportable segment, remaining are not. Very good, very good, very good. I think this is clear. So this type of questions may come into your exam. Done. In last, you have to check also one thing, one more thing, that is this is 1200 and 75% of it is 900. So you must have to check that those are which are going to be reported either due to the reason of assets or due to the reason of results or revenue. Whatever the reason is there, whomsoever a reportable segment, their total revenue must be 900 or more. If that's okay, then it is not a problem. Otherwise, you will have to add more. That's it. Minor theoretical understandings are there. I would like to tell you, read this. Having any doubt, tell me. Read it. Now we have to bifurcate our segments into primary and secondary segments. Earlier, we have finalized which are the segments to be reported. First of all, we have understood what is segment. Second, we have understood what is reportable segment. Now we are going to try to understand what is primary and what is secondary. Primary have some different disclosure requirements, and secondary segments will have some different disclosure requirements. This is from the disclosure point of view only. So, if the risk and return are affected predominantly by the difference in the product or services, its primary segment will be business. Now, we should have to understand that why I am discussing this. I am discussing it because number of time it happens that a business have business segments as well as geographical segments also. For example, I am talking about a company which is working in all over the world, having businesses, various businesses running in various countries in all over the world. So in that case, we should have to understand that reporting segments are there. That is to be done. We have done it. There's no problem. But we should have to do one thing, whether geographical segment will be the primary base and business segment will be the secondary base or vice versa. So that is to be understood by way of general understanding, by way of conceptual understanding. That's it. So that he is interested to ask you, tell you if risk and return are affected predominantly by the difference in the products. If everything is based on products, means your risk, whatever we are talking about risk and return. profits and losses are depending upon primarily on business, then business segment will be primarily and geographical will be secondary. We will take some example, it will be clear. Otherwise, vice versa. Now, what he is interested to say, he says, a single geographical segment doesn't include operations in economic environment with significantly differing risks and return. A geographical segment may be a single country, a group of two or more countries or region within a country. Means we may talk about that I am doing business in India, Canada, USA, and UK, or I may talk about that I am doing business in Asia, South Africa. Asia means we may talk on the basis of countries, or we may while finalizing segments, we may finalize this also. We are working in one segment, that is India plus Pakistan plus Sri Lanka plus means these five countries. And second segment is I am working in USA plus Canada plus UK because that is the second segment. Those are correlated with each other. That is all depending upon the nature of my business. The process I am working in that business, the process I am working in that location, that all depending upon the business to business, that all depending upon our way of working. Now, if I am working in all over the India, but while supplying goods to Punjab, Haryana, Himachal Pradesh, J&K, I have made a main office at Delhi only. So these all four states will be grouped under Delhi. The remaining states, I am doing separate business and they have offices in there in every particular state. In that case, every state will become a separate segment on the basis of geographical. But these four states will come under one state, that is Delhi. So five will be grouped under one. This is all depending upon my working style, my working system. So it is not a matter of discussion, it is a matter of understanding better. Now I'm talking about the most important thing, that is segment expenses, because we have discussed about segment revenue to some extent, segment profit or losses, but how to get the profit or loss? Profit or loss will be carried on the basis of revenue minus expenses. So whether only that particular segment's expenses will be charged to it, or we may charge other expenses also, which actually what happens, normally as management is same, head office may also be same, original offices may also be same. There may be a chance. So there are various expenses which are to be incurred for a particular segment, and there are many other expenses which are not to be incurred for a particular segment, but those are incurred in total at the head office level. So those are to be allocated to each and every segment separately. That he is interested to say in this particular topic. Expense. What is a segment's expense? That is aggregate of. Aggregate means total of expenses from the operating activities of that particular segment, plus that can be allocated on it on a reasonable basis, plus expenses relating to transactions with other segments. Number of times it happens that I am doing something for other segments also. There may be a chance. So if any expenses are incurred by one segment on other, then that will also be adjusted. So three parts are there. One is direct expenses, second is allocated expenses, third is expenses incurred by one segment on other. Even in number of cases it happens, one segment supply goods to other. So obviously whatever goods are supplied by one segment to other, that will be charged to the other also. Doesn't include. Earlier it includes. Aggregate means total of. Includes. Doesn't include. What is not to be included? Extraordinary items as per AS5. That is a part of head office. That is to be adjusted in head office part. That is not to be adjusted in segment reporting. Interest expenses are not to be adjusted except your business is of that nature that you are doing a business in which interest is a major part. Like we are doing a business of banking. In that case, interest is a major part. In that case, we will not we will take it. Otherwise, we will not take it. interest expenses including interest incurred on advances or loans from other segments. We have taken a loan from other segment. In that case, we are not going to pay any charge any interest to it unless the operation of the segment are primarily of a financial nature. Huh? Our business is of financial nature, we may add it. We are selling our investments or any or losses on extinguishment of debts unless the operations of that segment are primarily of financial. Again, same thing is there. Whatever the profit or loss we are bearing on investments or paying off loans, that will not be taken into consideration. Income tax expenses are not to be taken into consideration. General administrative expenses, head office expenses that arise at the enterprise level and relate to the enterprise as a whole, which are unable to be allocated, are not to be taken as a part of it. We can attribute or allocate only those expenses which can be allocated on the basis of reasonable basis. Those which are not to be entered on reasonable basis are not to be taken into consideration. Next is segment revenue. What is the revenue? Revenue meant for income minus expense. That is very much clear to everyone. So whatever revenue is there, whatever sale is there, minus above expenses. Segment assets meant for those assets which specifically relates to that segment. So these are the operating assets that are employed by a segment in its operating and activities. So for doing that, working in that particular segment, these are related. Otherwise, these are not to be entered. Is that clear? Read it once. Have a water. 3 points are there. What is an operating asset? Operating assets meant for those assets which are employed by a segment in its operating activities. Like I'm talking about a departmental store where grocery items are there. So whatever you may say blocks they have kept there for showing those goods to people, or whatever assets are directly related to the grocery items will be treated under it. That are directly attributable to the segment can be allocated on to the segment on a reasonable basis. If it is possible that some assets can be allocated on it on a reasonable basis, like we have 5 computers with us in that grocery store, in that departmental store, 2 computers are dedicated for grocery items only. On those, whatever accounting is to be done, or whatever billing is to be done, or cash items are to be done, whatever is to be done, that is for grocery only. So there is a reasonable base that they can be allocated, then do it. Otherwise, there's no need of it. It includes, if the segment result of a segment include dividend income, if the segment result of a segment includes interest or dividend income, its segment asset include the that related receivable loans or segments. Means if it is a banking business, if we are dealing in banking business or insurance business, in that case, obviously our revenue will include interest income or dividend income. If we are recording interest or business income, interest as our business income, obviously its investment will be our asset. So that he is interested to say. Now it doesn't include income tax assets. Means if we have a income tax refund due from the government, even it is due to be received, it is to be received from the government, but it is not to be allocated to any segment asset. It is receivable from the government, but it will not be entered. Asset used for generating enterprise, general enterprise or head office purpose. Means those assets which helps the head office to do their business smoothly will not be allocated to any particular segment. So whatever deposition is there, that is to be adjusted out of it. Whatever provisions are there, that is to be adjusted out of it. You know it very well. Assets are to be taken at return on value, not at the cost. Talking about segment liabilities. Yes, segment liabilities. Liabilities which are specifically related to a segment will be treated as a segment liability that results from the operating activities of a segment. Now, what means for the operating activities, that we know it very well, that our creditors are our liabilities. Creditors relating to a particular segment will be our liability, or any loan taken for particular segment will be our liability. So all that is that are directly attributable. Well, this includes basically your this include basically those which are directly attributable to segment or can be allocated. It include interest expenses, its segment liabilities, including the if segment results include interest expense, like in case of banking or insurance, obviously its liability will also include interest. Already discussed with you, it will include trade and other payables, means creditors, outstanding expenses, prepaid expense, outstanding expenses, or you may say uh, product warranty provisions or any other which is related to business. So you know it very well. All creditors, all loans are our liabilities, but it doesn't include if any income tax liability is there and other financial nature borrowings, means interest loans taken or any other such type of means which are related to our business will be taken here. Business means creditors or such other expense, such other liability. But if we have taken a loan from a bank for particular segment, even then it will not be taken into consideration. It will be taken only and only if it is of our business is of that nature. Otherwise, it will not be considered. Okay, beta. Yeah. One thing is important regarding interest. Yeah, this is important. Let's try to understand this. Treatment of interest for determining segment expense. Already discussed. Most interest related expenses will not be entered, but one thing it can be entered. What it is? If it is a CC limit or OD taken by us, if we have taken a CC limit or OD, in that case it is particularly relating to that particular segment or a business. In that case, it can be taken. So that he has mentioned the interest expense relating to overdraft and other operating liabilities identified to a particular segment should not be included as a part of the segment unless the operation of the segment are primarily of a financial nature or unless the interest is included as a part of the cost of inventory. There are two purposes in which case we can enter interest as our expense. One, if interest is a part of cost of inventory, which is rarely done better. What it means for while calculating the cost of inventory means while calculating cost of a product to be sold by us, we are adding interest in that. That is rarest of the rare. So only in that case, interest can be taken as a segment expense. Second, what it is, unless the operation of the segment are primarily of a financial nature, means we are dealing in banking or financing business. In that case, interest is our routine expense. So in two cases only interest will be taken. Otherwise, interest will never be taken as a segment expense. Is that clear? that we have already studied in AS2 in our accounting paper 1, that interest cannot be included except as a part of cost of inventory, except such interest should be considered as a segment. What he says, interest is included as a part of cost of inventory where it is required as per AS16, read with AS2, and those inventories are part of segment assets of a particular segment. Such interest should be considered as a segment expense in case not to be taken too much seriously. It is normally given in the question in a proper way. I would like to tell you that here interest, you think you always get some, you may say, hints for the same, that here interest is to be taken or not. 99% you need not to take interest, except it is specifically mentioned in the question that it becomes a part of the cost of inventory, or it becomes a part of the business in routine that we are doing in a we are dealing in a financial business or a banking business. Only then you have to do it, otherwise there's no need of it. And whenever it is to be done, you must have to give a proper disclosure by way of a note. That is given here. Here it is mentioned, segment result has been arrived at after considering such interest should be disclosed by way of a note beta. It is required to be given by way of a note as a segment result. So whenever it is to be done, it is to be so I have discussed with you that reporting, for reporting purpose, we have to divide our segments into two parts. One is primary and second is secondary. What is required to be disclosed in case of primary and in case of secondary, that we have to discuss. In case of primary, you should have to disclose segment revenue, segment results, total carrying amount of segment assets and liabilities, total cost incurred during the period to acquire segment assets that are expected to be used for more than 1 year, means those which are our assets. We know it very well. We are discussing about fixed assets only, because those are the fixed assets which are to be used for more than 1 year. Total amount of expenses including the segment result for depreciation, means whatever depreciation or amortization is to be done, that is to be shown. Any non-cash expenditure done like depreciation, etc., to be disclosed. A reconciliation is also required. An enterprise should present a reconciliation. What it is? Now, what we are doing? We are disclosing our all revenues of different segments. I am saying that my reportable segments are India, UK, and US, and their total revenue is 660 lakhs. I must have to show a reconciliation in which I have to make it clear that revenue of reportable segments is equal to 660 plus revenue of non-reportable segments is 160 and total revenue is 820, which is to be reconciled with the total revenue of the organization. So that we have to show. This is called reconciliation for all assets, liabilities, expenses, assets, liabilities, and profits. Simple. Just to clarify that basically number of times it happens we are making some false disclosure. So to stop that, this has been done. If company is saying that my revenue of reportable segments is 660 crores and non-reportable segments is 100 crores, this becomes 760. But total revenue is 820 crores. How is it possible? So you have to prove that by way of a reconciliation, so that you can't make any false commitments, or you can't. You should be stopped from disclosing anything false to the users of accounts. Okay, beta. So talking about secondary segment reporting, that is comparatively very easy. Now, if we know it very well that out of geographical and business segment, one will be primary and second one is secondary. So whatever the secondary segment is there, you have to disclose segment revenue from external customers by geographical area based on the geographical location of its customer. That you can see in an example. I would like to explain you by way of an example. Then the total carrying amount of segment asset by geographical locations for each geographical segment means whose turnover, whose assets are 10% or more. So you have to disclose that total revenue, total carrying amount, total assets, revenue, cost. This is to be disclosed. So this is mentioned. This is just for reading purpose. What is required to be disclosed, beta? You can just read it. If there's any doubt, you may ask me. So one thing is there, which is very important. Keep it into your mind. Many times we are making some interdepartmental transfer. Means one segment is transferring goods to other segment also. That is to be read properly and understood, because we will discuss that if there is any doubt in that by way of some illustration. When you will do the illustration, you will understand that. If there is any doubt, we will understand. We will let you understand. Regarding disclosures are also to be. So I assume that this AS is covered, and assume that this has been understood to you from practical point of view. Whatever questions will come into your exam, you can easily solve it. But even then, we have one more next lecture in which we will, if there is any doubt, we will discuss it. Otherwise, we will go for the next AS. I suggest you to read the next AS also, AS 18, before coming to me for the next lecture on Wednesday. Give good feedback if you have understood the concept, if you are understood the, if you are feeling that you are getting each and everything. Always give good feedback. It will be helpful for the ICI to present them in a better way. Thank you very much.